what are you doing personally and what are you seeing some of your clients doing and how can we help our clients, and talk about strategies about investing in your 30s. So Nick, the big 3-0, right? Everyone turns 30 at some point, and I think there's a lot of life changes that a lot of individuals and couples go through, especially when they turn 30. And throughout that entire decade, at least for me personally, it was a big milestone with the birth of my son. And life has really been a roller coaster ever since. And I know managing money has become the forefront of conversation between my wife and I, especially with all these life changes. And I would love to hear your perspective as well about some of the things now that you're in your 30s as well, of what are you doing personally and what are you seeing some of your clients doing, and how can we help our clients, and talk about strategies about investing in your 30s.
Yeah, it's great to be here with you, Ben, talking about investing in your 30s, us both being in our 30s and talking to clients about what they should be doing as well. We're going through a lot of the same things that our clients are going through. Like you mentioned, having a kid, for me, buying a home recently, starting a family in the near future. We're going through a lot of these major life events that our clients are. So it's good to be here with you, talk about these events and really how to invest and build for your future, especially during, these times that we're in today. Maybe you could tell me a little bit about what you're thinking about the current markets and how to invest, and especially being 30, how do you weather the storm that is the current market today?
Yeah, absolutely, Nick. So 2025 has been a crazy year, to say the least. And there's definitely principles I think that can apply no matter what's going on in the economy and the markets, which we'll definitely talk about throughout our conversation today. But I think some of what's really current that's been on the top of mind for a lot of different folks are the craziness around tariffs. We saw a crazy roller coaster of a market to start off the year, right? It sort of started out and then took this deep plummet, and it's since recovering, but it can be challenging for folks, especially when we're in our 30s and thinking, I have a lot of expenses that I need to maintain. So how am I making the right decisions within my 401k? Am I allocated correctly with the level of risk? Typically you're looking to be more aggressive in your retirement accounts, right? And do you have the wherewithal to withstand some of these market conditions from tariffs or high interest rates that we've been dealing with? Do you have emergency funds in place, right? A lot of the big expenses for me are paying the mortgage every month, paying for daycare, paying for another mouth to feed. Now that my son's a little bit older, the grocery bill has basically doubled from a few years ago.
Yeah.
So do you have the appropriate amount of cash reserves? Because your monthly expenses now are so much different from where they were maybe 4 or 5 years ago, right? And we've since upsized our home. So our home expenses are higher, our grocery bills are higher, gas and utilities is higher, being that we're in a larger space, right? There's all these different things to consider. And I think that really managing the level of risk in your portfolio, but having somewhat of a bucket approach as well is really key, making sure that you have a short-term bucket of liquid savings, money that is taking little to no risk at all, basically money sitting in cash or maybe treasury bills. Do you have something in place for more of your medium to long-term goals? I'm thinking more of like 529 plans or college savings plans for your kids that are taking some risk, but not so much risk that if you sent your kid off to college in the next 5 years, would you be SOL because the market just dipped 20% and now you don't have enough money to pay for tuition, or you don't have enough money to maybe pay for private school for your kid or a family vacation or upsizing that home, right, for a down payment on a house. And then, of course, not taking enough risk in your retirement account because you're so focused on the day-to-day and you kind of forget about your 401ks and other retirement plans out there, saying, I may have not allocated this properly. I sort of just, when I started my new job, I defaulted into the one fund that my company gave me, but maybe I should have taken some more time to really look at a more diversified approach and taken more risk to try to capture a higher rate of return for my retirement years, 20, 30 years from now.
Right. Right, and those are all really good points, having different accounts for different goals. You really want to think about, for me, is, what I did was just think about my goals and prioritize what I need to save money for, right?
Mm-hmm.
So short-term goals, you can think about things like vacations you're planning within the next year. Do I have enough money saved up in one of my, short-term, maybe high-yield savings accounts that I can go take that trip next year? Medium-term goals could be, a rental property if you already own a home. If you don't own a home, maybe it's that, saving for a down payment if you're currently renting, but you want to make sure that you do have money available for, buying a place to live in. And then, of course, your long-term goal, that's your retirements. Your 401k is such a great vehicle for you to save for retirement.
Mm-hmm.
And one of the best things about a 401k is it really promotes automation within your saving, right? You earn your paycheck and you can decide a percentage of that paycheck to go directly from, your paycheck into the 401k. A lot of times you don't even think about it. You don't even seeing that money go into the account, but you're automatically putting money in and you're creating good saving habits so that money can grow and compound in your retirement account for when you need it in the future.
Yeah, I definitely agree with you, Nick. I think once folks set up their 401ks, it becomes something that's not even a thought anymore.
Right.
Because you're not looking at what your gross pay is on your paycheck. I think everyone's paycheck today gets automatically deposited right into your checking account. And you're not seeing that gross number, you're just seeing that net number deposited, and that becomes the number that you're accustomed to living on. And just to piggyback off that a little bit, Nick, I think another area where some folks just maybe aren't as aware of is especially when they change jobs or they get a bonus or they get a promotion and now their income is higher than where it was maybe a few years ago. And maybe at their prior job, they were saving 5%, making $100,000 a year, and now they're making $150,000 a year. Well, obviously that 5%, right, that's only $5,000 versus $7,500, right? But maybe even increasing that number a little bit more and saying, hey, I'm making more money, but I'm already used to living off of $100,000 a year. So maybe I will bump that 5% to 10% to keep in line with the level of income that I'm making. And I know it can be challenging, especially when you have different expenses. You're thinking about buying a new home, you're thinking about paying for your kids, sucking the refrigerator dry every week from groceries. And there's definitely a lot to think about. But as you said, if you get into those good savings habits about just being consistent, but also making sure that you're continuing to save more and more over time in line with the level of income that you're making, I think a lot of folks are going to find themselves in a much better position 30 years from now to retire versus them staying to the same savings habits that they were in maybe 5 years ago when they were in their 20s.
Right. And that's a great point. If you can at any point in time raise your contribution rate to your 401k, if you can do that and look at your paycheck and see, you're doing pretty well, the more money you get into your account, the better, especially at a young age. And if you need to change it in the future, you can always bump that down if you need to. But
right.
If you increase it, you're putting yourself into good savings habits, and that really goes into the compound returns, and that time is on your side in something like a 401k, where if you have 20, 30 years for your money to grow and for the interest to then grow on itself throughout those years, you'll be very surprised at the money you've saved up by the time you get to retirement.
Yeah, absolutely. I know JP Morgan has this great chart of the power of starting early versus someone who's starting later, right? Someone who's maybe contributing a few $100 a month, that 6% will end up being off so much better from someone who starts at 50, saving several $1,000s a month, getting an 8% rate of return, just because you said compound interest is so powerful. So if you're able to save early, it can really have a much more profound effect over the life of your investments into your retirement years. And I think another thing too, Nick, just changing the conversation a little bit, are the tax implications around savings, right? There are all these different types of retirement accounts available today and non-retirement accounts. And sometimes folks aren't even aware of, or they just say, hey, which one is right for me? And I think with the popularity of Roth accounts really coming into highlights across the United States for a lot of folks, I think being able to contribute to maybe a Roth IRA or a Roth 401k, even though you're going to get taxed on that money today, you're never going to have to pay taxes on that money again once you retire. And that's a huge savings, right? Because compound interest on a pre-tax account also comes with compound tax, right? And the Roth 401k, of course, you can't touch until you retire, but a Roth IRA is money that you can put in, and any dollars that you put into your Roth IRA that you contribute, not the earnings, of course, but any money you can contribute, you can actually take back at any time for any reason without a penalty. And this is a huge way for a lot of folks to save, to be able to invest for their futures, but also have that flexibility if, like you said, an expense pops up, like a family vacation, you're looking to upsize your home, you need a new car, right? Now your family of 2 is now a family of 4, and the kids have sporting equipment and musical instruments and all these different things you got to load up that your coupe or sedan could never fit, and now you need an SUV, right? And SUVs aren't cheap, right? We've seen a lot of the car companies have already said we're jacking prices way up with all the tariff conversations that have, some of them haven't even stuck, and car companies are saying we're just jacking the prices up anyway, right? So I think the power of looking at not just how much you're saving, but where you're saving it is a very, very important thing to do, especially when it comes to considering Roth IRAs and Roth 401ks compared to traditional savings accounts.
Yeah, and we live in an incredible time to where Roth is very preeminent within our 401ks and our IRAs. You know, we talk to people in their 50s and 60s who never really had that option to invest in a Roth account. So if it makes sense for you and your tax situation, it's a great opportunity to save money on an after-tax basis.
Yeah, absolutely, Nick. Is there anything else that we may not have covered already that you think is important for folks to consider at this point, especially throughout their 30s, because it is a very turbulent point in our lives?
I think investing in your 30s is really about building good habits, staying consistent with your saving, and planning for the future. Instead of really trying to get rich quick, right? These are the years where you're building good habits and you're saving, and that will pay off down the line when you get to retirement.
Absolutely. Well, thanks, Nick. This has been great. I feel like I've learned a lot just talking to you, and it's always good to share some ideas that folks might not be thinking about, especially as they're in their 30s.
Yeah, I enjoy talking about investing with you, and we'll do this again soon.
Sounds good.